eye to settle political scores. Just to hit a few of the lowlights, Project 2025 would also gut agencies like the Consumer Financial Protection Bureau and the Federal Reserve, and dangerously restructure the Treasury, the Department of Housing and Urban Development, and other agencies critical to the economy. Moreover, Project 2025 describes plans to withdraw from international financial institutions like the IMF and the World Bank, both of which have advanced U.S. democratic ideals all around the world. I yield back.
The chair now recognizes Mr. Lukemeyer, chairman of the subcommittee of the on National Security, Illicit Finance, and International Financial Institutions for 1 minute.
Thank you, Mr. Chairman, and welcome, Secretary Yellen. Since we heard from you during last year's annual testimony, the global debt crisis has only grown worse. Russia continues its war against Ukraine, and with the help from Iranian funding, Hamas perpetrated a heinous attack on Israel, our closest ally in the Middle East. Meanwhile, Communist China continues to threaten global economic security through unfair, even illegal trade practices, and threatens regional security with escalating aggressive actions against the Philippines and Taiwan. It is therefore bewildering, despite that behavior, why and how the CCP still receives over $1 billion annually from World Bank commitments. Indeed, the global economic and security situation has deteriorated so dramatically during the 3.5 years of the Biden administration that I can't help but ask, what have they been doing that could account for this? In the international financial system, the administration's weakness on Iran sanctions and on energy in general is one obvious culprit. At the IFIS, the continued push for the green agenda through the evolution roadmap is another, prioritizing climate over the needs of 700 million people who remain mired in extreme poverty. With that, Mr. Chairman, I yield back.
The chair now recognizes the ranking member of the Subcommittee on National Security, Illicit Finance, and International Financial Institution, Mrs. Beatty, for 1 minute.
Thank you, Mr. Chairman and Ranking Member Waters and Secretary Yellen for being here today to testify. I'd like to echo the remarks made by Ranking Member Waters. Over the last 3.5 years, President Biden has helped restore the United States leadership in a global economy. We are experiencing unprecedented levels of job creation, historically low unemployment, declining inflation, and growing wages and wealth. The rebuilding of an economy that works for everyone. I want to thank you, Secretary Yellen, for the work that you've done to restore our leadership at the international financial institutions and to protect our economy and the national security. I also want to thank Leader Hakeem Jeffries and the Democrats by governing and for governing, by giving the votes necessary to pass the debt ceiling, although we are in the majority. I look forward to continuing to build on the historic work that you and President Biden and the administration has done. Thank you, and I yield back.
Today, we welcome the testimony of the Honorable Janet Yellen, the 78th Secretary of the Department of Treasury. Secretary Yellen, thank you for being here. You'll be recognized for 5 minutes to give an oral presentation, and without objection, your written statement will be made part of the record. You are not, this is not foreign territory to you over the years, so we welcome you back before the committee. And I'll now recognize you for 5 minutes.
Thank you. Chairman McHenry, Ranking Member Waters, and members of the committee, thank you for the invitation to testify in my capacity as chair of the National Advisory Council on International Monetary and Financial Policies. The United States built the international financial institutions 80 years ago with our allies and partners. Today, U.S. leadership at them is essential to our national and economic security. We work through the multilateral development banks to fight poverty and drive sustainable and inclusive growth, strengthening developing and emerging markets that are key trade and investment partners for the United States, and addressing global challenges such as climate change, pandemics, and conflict and fragility that threaten to undermine global economic growth. The International Monetary Fund provides crucial support to countries to help resolve debt problems, minimize negative spillovers to the global economy, strengthen governance, and restore growth. These institutions' strong balance sheets make U.S. contributions to them safe and highly cost-effective. They crowd in support from other partners, and the United States works as the largest or near largest shareholder in all of them to make sure they use their funds well. These institutions are also the only realistic option for the United States to offer high-quality and transparent development financing at the scale needed to be a U.S.-led value proposition that competes with China's. We must show leadership and contribute strong financial support, as it's only become more important to provide credible alternatives to lending options that can be opaque and coercive, potentially undermining borrower countries' sovereignty and long-term economic sustainability. Over the past year, we continued to push for evolution at the MDBs so that they're efficient, effective, and can better help countries address global challenges. Congress enabled a $250 million contribution to the World Bank's Ida crisis response window, demonstrating U.S. commitment to providing a critical lifeline for the world's poorest and most vulnerable countries. We made the largest pledge to the replenishment of the International Fund for Agriculture and Development, a strong partner in increasing food security. We also helped lead successful negotiations around capital increases and important reforms for IDB Invest, the private sector arm of the Inter-American Development Bank and a key partner in Latin America and the Caribbean, and also for the European Bank for Reconstruction and Development to enhance its lending capacity, including for continued support of Ukraine. We now ask that Congress authorize our participation in these capital increases and in the African Development Bank's callable capital increase so that it can continue to lend at current levels to countries that otherwise would be forced to look elsewhere. The President's budget also requests $1 billion that would enable up to $36 billion in new lending capacity at the World Bank as we continue to press international partners to join us in efforts that could expand lending headroom by $100 billion. At the IMF, I thank Congress for authorizing lending $21 billion to the Poverty Reduction and Growth Trust, making us the largest contributor and further showcasing our strong commitment to supporting low-income countries. We also led successful negotiations on the 16th General Quota Review so that the IMF is adequately resourced to continue to play its crucial role at the center of the global financial safety net and to preserve our quota share and veto, solidifying U.S. influence at this vital institution. We request authorization to increase the U.S. quota to cement this significant achievement. Let me stop there. I'd be happy to take your questions.
Thank you, Madam Secretary. I'll now recognize myself for 5 minutes for an opening statement. Let's start with the notice of proposed rulemaking on outbound investment. We've talked a good bit about this. As I said in my opening statement, I think it's a step in the right direction what the administration has done. I welcome it. But we have time-tested tools of sanctions that are clear, red light, green light, what's permissible, what's not permissible. So we have a notice of proposed rulemaking, and there's a line established that is about what is investable technology that's prohibited versus a reporting regime, and it's not clear. So just want to have one question as an example. The difference between AI, artificial intelligence used for an MRI, in a medical setting to identify cancer. And a drone operator using location targets, imaging, to target in a weapons setting. How do you draw the distinction between those two different AIs?
Well, we recognize that in artificial intelligence, it's widely used for many different purposes, and the regime that we've proposed is really oriented toward those uses that are clearly national security risks. We want to make sure that China and other countries of concern don't gain access to technologies and products that are critical for
So why not
narrowly-
why not just name names and say, don't invest in these companies? Isn't that the clearest route to stem the flow of capital going into Chinese technology? Let me give you another example. So the regulation says that AI that operates at either the 10 to the 24th, 10 to the 25th, or 10 to the 26th computational operations would not be investable for Americans. What is the real-world difference between these operational levels and the significance of one being used in a military capability setting?
Well, we've tried to target technologies that are critical and can contribute to military intelligence or cyber capabilities in countries of concern. We want to make sure that what we're doing here is narrowly targeted at clear national security
But why not just use
risks.
sanctions for that? Why not just use direct sanctions that say do not invest in these companies? Red light, green light, there's the complete clarity here. Why not just go with that approach?
Well, sanctions usually are put in place after something has occurred that creates a problem, and these are very rapidly evolving areas. We know that there's a gap in our regulatory framework, and we want to make sure that American firms and persons are not contributing through their investment activities to enabling firms in China or other countries of concern.
So we're trying to get at the same thing. I'm saying clearly we have sanctions that we can proactively take on companies that are using this technology, and it's far clearer. And that is a far clearer way to stem the flow of U.S. investment capital into China. Let me switch to one additional topic, which is the beneficial ownership regime. As I said in my opening statement, we wanted clarity here. We didn't want redundancy. Why did the Treasury bifurcate the beneficial ownership rules and move forward without the third rule? And when can we expect Treasury to publish the customer due diligence or the CDD rescission rule? Right now, you have two reporting regimes on small businesses. This is onerous. When are we going to clear what's the timeline to clear that up?
So that's something we're working on revising to make sure it's consistent with the requirements of the Corporate Transparency Act. I believe that we're hoping to get something out this fall. We're engaging right now with other stakeholder agencies to discuss the substance of the proposal, and we want to have a notice that will enable the public to weigh in with their own comments.
All right. Well, right now, because of Rules 1 and 2 going live, every small business in America has a new reporting requirement that they are most likely unaware of, and this needs to be cleared up. We'll now recognize the ranking member of the full committee, Ms. Waters, for 5 minutes.
Thank you very much, Mr. Chairman. Secretary Yellen, I don't have much of a question to ask you. I want to thank you, basically, for the work that you have done. You know, there's a lot of talk about helping small businesses and minority businesses, but under your leadership, working with the President of the United States. You've done a magnificent job. I want to thank you for the CDFIs, the Community Development Financial Institutions, an alternative to the big banks who don't give loans to small businesses. They don't want them in the bank. But because of CDFIs, people have a place to go to present their case and get loans. The other thing I want to thank you for is the Minority Business Development Agency, which you put $125 million into in order to teach and to train and to make sure that small businesses have the assistance that they need, the technical assistance to these businesses so that they have the legal, the accounting, and business advice that they need to grow and prosper. And of course, I want to thank you for the SSBCI. We put in this committee $10 billion to create 10 million loans. And I want you to know that it's making a difference. I want you to know the other side has not done any significant work for small and minority business. We're trying to close the wealth gap. I give you credit for your leadership, for your understanding. Well, I guess if I want to ask you a question, I want to ask you, do you think that these kind of efforts will help us to close that wealth gap?
So I absolutely do, and I very much want to thank you for the strong endorsement that you've given Treasury's work. I know how important this is to you, and it's important to the country. It has been our focus to use the funds that Congress has provided most effectively since day one of the Biden administration. And addressing the wealth gap, this is a top priority. At Treasury, we're trying to use every single tool that we have to make headway on this. As you know, this is something that is difficult to eradicate, but I think our efforts are making a difference. And as I've traveled around the country, I've often had the chance to visit businesses that are getting help from CDFIs in low-income or minority communities, and I have seen small businesses get the support they need through CDFIs or through SSBCI to develop and thrive. This is a clear focus of all the work the Biden administration has done.
Well, and I think it's important for people to know this is all over the country, and I'm trying to get my colleagues on the opposite side of the aisle to work with us so that rural communities and small communities and towns can have more access. The infrastructure is not there with nonprofits and others to work with what you're doing for all of us. And maybe there's something you can say or do to encourage those who have small towns in their areas that don't know about the programs. And when we take it to them, to ask them, don't you want to participate with CDFIs? And don't you want some of the money that comes to your state with SSBCIs? What can we do to get them more interested so that more of this money can get into rural communities? I know you don't have time. This is not the proper place to educate them now, but perhaps you can volunteer to meet with some of my colleagues to get them interested from the opposite side of the aisle on how they can take advantage of what you're doing, what the president is doing, and what we're learning we can do to help equal the playing field so that we can have financial services working for everybody and that we can have women and minority-owned businesses, et cetera, that have been excluded for so long participating because of the work that you're doing.
Well, thank you very much, and we would be glad to work with you or with others who are interested in bringing these benefits to low-income and rural communities. We do try to do significant outreach, and we're certainly prepared to do more. Would welcome the collaboration.
Thank you. I yield back.
Gentlewoman's time has expired. I recognize myself for 5 minutes. Madam Secretary, it's great to have you before the committee. It's been more than 2 months since President Biden signed the Repo Act into law, and I'd like to see it swiftly and fully implemented by the President. I wrote to you in May, joined by Congresswoman Waters and Congressman Meeks, to encourage the administration to do that. And while I support doing all we can to help Ukraine eject Putin, I have several concerns about the extraordinary revenue acceleration loan package announced by the G7 leaders last month. I question whether this plan can really work in practice. Under the Repo Act, the President already has the authority to go after Russian sovereign assets in the United States, and I believe these frozen assets should be legally seized, the ownership converted, and those funds deposited in the repo contemplated trust fund. I think that's in the best interest of Ukraine, the U.S., and our G7 allies, and I think it sends the right message that we're leading. Congress, on a bipartisan basis, passed this law. We want tough sanctions. We want Ukraine to have the arms they need, and we need the financial deterrence that repo brings. As Margaret Thatcher told us years ago, this is no time to go wobbly. I'd like to know how we're implementing that law. Will you commit to meet the mandatory deadlines as required by Section 104 of the Repo Act starting July 23rd?
Well, we will meet the requirements of the Act, but let me say we were very pleased with the passage of the Repo Act. It provides Treasury and the administration with an important set of tools, and we think all options should be on the table. However, we also believe a strength of our response to Putin has been that we have a global alliance that has worked together in support of Ukraine. And so we have looked for an approach that our allies, particularly the G7 and the European Union, could be supportive of, that would deliver significant revenues to Ukraine. And as I think you know, the G7 leaders in June did endorse—
I know, Madam Secretary. Let me reclaim my time just to use it effectively. And I thank you for your leadership. But the Repo Act, as Mr. Meeks and Ms. Waters and I point out, it does give more strength. We should be leading and use that full tool because we know the support is there in Europe if we'll provide that leadership. What's the total amount, now that you've had this 2 months, of frozen Russian central bank assets held in the Federal Reserve here in the United States?
It's a relatively small amount.
I understand that. Could you give us the amount, please, ma'am?
I mean, it's on the order of $5 or $6 billion.
All right.
And so it's not, most of the assets are held
I understand
in
that.
Europe.
I understand where the assets are held. Thank you. Let me switch subjects. FIT 21, I want to thank you. I want to thank Undersecretary Lang for the work you did on looking at our digital assets regulatory framework, which we worked on mightily over the last year on a bipartisan basis. I think I particularly want to thank the White House for the Statement of Administration Policy, which says that you're eager to work with Congress on developing legislation for digital assets to ensure a comprehensive and balanced regulatory framework. You continue to commit for the balance of this Congress to work with the committee and in the Senate to achieve a regulatory framework for digital assets?
Yes, very much so. I'm happy to make that commitment, and we have worked productively together. It would be nice to see this reach a good conclusion.
On another topic related to digital assets, you know, the SEC and the CFTC are consistently taking opposite legal positions in federal court on digital assets. In your capacity as the Financial Stability Oversight Council leader, what are you doing to bring the CFTC and the SEC together and be on the same page about this matter?
Well, I mean, it's not the job of the Financial Stability Oversight Council to adjudicate
No, but you're supposed to quarterback financial risk. Are you quarterbacking between the CFTC and the SEC on this dispute?
Not really. Our view, we have done a report on the risks connected with cryptocurrency and digital assets.
Right. In my
and
final—
our risks have to do with holes where there's a lack
Right.
of authority.
I agree, and you're working constructively with us. Thank you. In my time remaining, I'm going to submit some questions on the multilateral banks and what I think is a preference that China is seeking, and we need Treasury to push back on that. My time has expired, and I recognize the gentlewoman from New York, Ms. Vasquez, for 5 minutes.
Thank you, Mr. Chairman, and welcome, Secretary Yellen. Thank you for being here this morning. As you know, many working-class families and small businesses are concerned about inflation. You recently told Yahoo Finance that you expect inflation to come down, and as we get into next year, you believe inflation will get back to the 2% target, and you do not see the basis for a U.S. recession. Can you explain your expectation and how the policies of the Biden-Harris administration have helped temper the rate of inflation and given you this sense of optimism?
Well, I'm optimistic because I believe that the big inflationary impulse that we saw in 2022, largely it was global and it largely reflected supply problems stemming from the pandemic and its impact around the world. And due to the work of the Biden administration and firms in the economy and the pandemic being resolved, many of those supply issues are now fully resolved. So much of the pressure has diminished. On top of that, we have a strong labor market that has attracted many new people into the labor market. Labor supply has surged, and although the labor market was initially very tight, now we have a strong labor market, but one with fewer pressures that would create inflationary concern. So inflation is coming down. The measure the Fed focuses on is now running at 2.6% over the last year, and I believe that it will continue to come down over time. Rents and housing costs continue to leave it higher than we would ideally like.
Yeah.
And it'll be a while before housing costs come down to a more normal level, but that process is in train.
Thank you. And Madam Secretary, in his opening statement, Chairman McHenry mentioned the IMF's warning about the U.S. debt burden. However, in the same Yahoo Finance interview, you were also critical of the tax cuts passed by Donald Trump and congressional Republicans, saying that that decision was responsible for many of the problems that we face now with our fiscal trajectory. Can you explain the fiscal problems that arose from Donald Trump's tax cuts and how the Biden administration is working to reduce these effects?
Well, it was a tax cut that had a very large impact on the deficit and the national debt. So it was costly, it was regressive, it did not pay for itself, and in a way, it concealed its true cost by including delayed razors, phase-outs, and sunsets, some of which Congress will have to deal with next year. We did not see an investment boom that was promised by the act, and President Biden believes it's important to be on a fiscally sustainable path.
Thank you. I hope the other side is listening. Secretary Yellen, millions of businesses are required to report their beneficial ownership information to FinCEN by January 1st. Yet, according to several conversations I'm having with businesses in my district and across the country, many legitimate businesses are unaware this requirement exists. How is FinCEN and the Treasury Department working to increase awareness of this requirement, particularly amongst rural and underserved businesses in which English is not the primary language?
Well, FinCEN has a very active program of outreach and of education, and I believe that you participated, and I want to thank you for that, hosting an event designed to inform people and business owners about what the requirements are. There is, other language
Madam,
support.
if I could just make a suggestion, I would like to see a better coordination, Mr. Chairman. Please give me just a second. To work closely with the Small Business Administration. We have a network of SBDCs across the country, over 1,000. This is an
The
opportunity.
gentlewoman's time has expired.
I will
Work
share
together.
that. I will
Thank
share
you.
that.
I yield back.
The gentleman from South Carolina, Mr. Norman, is recognized for 5 minutes.
Thank you, Mr. Chairman. Thanks, Secretary Yellen, for coming today. I think the chairman, when he was in the chair, mentioned about the beneficial ownership. How's your office going about educating the 32.6 million businesses that have never heard of FinCEN? You've got a penalty of $250,000 plus 2 years imprisonment on something that's been ruled unconstitutional by a court in Alabama. What are you doing to, one, inform the businesses who are the linchpin for this economy? And secondly, is any thought to extending the 12-month deadline to a year, another year for 2 years?
Well, as I mentioned, there is an extensive outreach and education program that's taking place across the country. People with FinCEN are hosting events. We're happy to work with members of Congress to explain what this is about in different parts of the country. So if you have an interest in that, please just contact us. But there is an extensive outreach effort. It's a very simple process. Takes 15 or 20 minutes, I believe, for most firms to be able to file. There's a very user-friendly website where the information can be input. It's not a difficult process. And don't think, we've seen a good response so far, and don't think it's going to be necessary to extend the time frame. It goes through the end of this year.
What's the numbers that have already complied?
I believe 2.7 million is the most recent number.
2.7 million out of 31 million. That's kind of a low percentage. Now, if the penalty is going to stay into place, you say this is simple, but for the businesses, these businesses are struggling. They're just trying to make ends meet with this Biden administration, what they're doing with inflation, what they're doing with the supply chain, all the above. And to put another regulation on them at this point in time and not know, put me on your list for what FinCEN is doing.
Okay.
Your average plumber is not going to go on a website and try to find out how to comply with the beneficial ownership. So if you could supply, and I'll send you a letter after this, if you could comply and consider extending it. $250,000 fine is ridiculous.
So, the fine is for willful violation, as I understand
Define willful
it, of
violation.
the rules. And your plumber example is not somebody who is willfully violating the rules. FinCEN is not going to go after, prioritize going after small businesses who are
Secretary
unaware.
Yellen, you realize that's in the print. The fine, you realize the fine is printed.
For willful.
How do you define willful?
Well, someone who knows they have an obligation and fails to.
Does that apply to the plumber who doesn't know what FinCEN is? It's in the example I used. Does that contractor, that plumber, that welder, if he has a business, is it willful if he just doesn't comply?
Well, there is a massive education and outreach effort, and I would not regard, personally, I wouldn't regard that as willful.
Okay, well, if you could clarify that then, in print, not talking, I think that would mean a whole lot. Now, on another subject, I'm in South Carolina. The Chinese are buying up farmland all over this country. What's the role of the Secretary of Agriculture? What's your role in, I guess, allowing this to take place, if any?
Well, CFIUS has the ability to ban land purchases or, in some cases, even insist on divestiture of activities taking place
Are they
in the
doing that now?
vicinity.
Define, how are they banning it? It's taking place now. They're doing it through separate entities,
Well-
LLCs. Tell me, walk me through, and I've only got 12
We
seconds.
just-
I'll write you a letter. If you could
We-
define for me what banning means and how specifically you're
We
stopping.
work closely with the Defense Department. This is national security oriented. And yesterday, we issued a new proposed rule that adds 50 additional military bases to the existing ones and changes some of the
Gentleman's time has
perimeters
expired.
of some. It follows a thorough Department of Defense review.
Gentleman's time has expired. The gentleman from California is recognized, Mr. Sherman, for
Madam
5 minutes.
Madam Secretary, I want to commend you and the entire Biden economic team. Over the last couple of years, we've seen the greatest decline in the inflation rate at any time this century. And at the same time, we've kept unemployment at historically low levels. I want to thank you and the entire team for that effort. I want to compliment you for the direct file system that has allowed millions of taxpayers to be able to file their tax returns in an electronic form without paying $130 to TurboTax. And quote your good words before the Senate, where you said one day information that taxpayers receive on the W-2 forms and the 1099s could be used to pre-populate the program. And I look forward to the day when the majority of Americans can file their tax return in less than 2 minutes simply by seeing the W-2 form and the 1099 information. They already achieved that in about a dozen countries in Europe. The gentleman from Arkansas mentioned the Repo Act. Those assets should be used to go to Ukraine, but there are Americans who have claims against those assets, judgments against those assets. And I hope that we wouldn't send all the money to Ukraine and then tell the Americans with claims that they're out of luck. The money laundering laws are important. I want to bring to your attention that Florida and now Tennessee have laws designed to, and it's perhaps a good purpose of these laws, to say that you shouldn't be denied financial services because of your political opinions or religious beliefs. But I hope that you will work with those states and preempt those laws as necessary to protect the Bank Secrecy Act. We shouldn't be in a circumstance where you lose your account because you have all these suspicious activity reports and the bank can't tell you about the suspicious activity reports, and all of a sudden you think it's because of your political beliefs. In the past, when you've come here, I've talked to you about how China has incentives for its domestic taxpayers to invest in Chinese companies, but denies those for investments in the United States. But we have incentives for Americans to invest, we call it capital gains allowance, and we provide those to those who invest in China. But I want to focus instead on India. India has cut its corporate tax rate from 40% to 22%, but they have excluded branches of foreign companies. So many U.S. companies can just form a subsidiary and take advantage of that 22% rate, but American financial institutions have branches. As a technical matter, they can't form a subsidiary. And I hope, can I count on you to bring this up with the India Ministry of Finance, that American companies should have the same tax rate as Indian companies in India?
Well, I'd be glad to have my staff discuss this with you in greater detail and to understand the issue.
I look forward to that. I want to commend you for sanctioning individuals who use sexual violence as a weapon of war in Sudan, the Democratic Republic of Congo, and South Sudan. But the greatest use of sexual violence in war this century is the 100,000 Tigrayan women who have been subjected to sexual violence in northern Ethiopia. Can you commit to applying the same standards that you did for Sudan, the DRC, and South Sudan to individuals, particularly in the Ethiopian and Eritrean military, who have carried out this campaign of sexual violence against Tigrayan women? Can I count on you to use the same standards?
So this is really a determination that has to be made by the State Department rather than Treasury, but certainly human rights violations have been a concern.
And finally, the Russian Central Bank has urged the use of crypto to evade Western sanctions. A stable coin offers no particular advantage in that it's stable. You can't make money by holding it. And it usually doesn't pay interest, certainly not the interest you get on money market funds. Its sole advantage is evading our sanctions and other laws, including tax laws. And I hope that in enforcing our sanctions on Russia, you will not facilitate that by facilitating stablecoin.
We are very attentive to the use of cryptocurrencies and stable coins. We don't think it's a very substantial thing that Russia is doing, but as our sanctions bite more and more, it becomes a concern.
Gentleman's time has expired. The gentleman from New York, Mr. Gabarino, is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Madam Secretary, for being here today. Back in September, the CFPB announced that it is considering a Fair Credit Reporting Act, SBREFA, that includes a broad and novel definition of data broker.
Of what?
As I mentioned to Director Chopra, I'm very concerned that this proposal may not recognize how consumer data is used for identity verification and fraud prevention. Use of data for these purposes is not the same as using it for credit eligibility purposes and therefore shouldn't be subject to the FCRA. Further, the companies that provide identity and fraud prevention technology to financial institutions should not be regulated under the FCRA, as they are already fall under the Bank Secrecy Act, the USA Patriot Act, and the Graham-Leach-Bliley Act. It'd be a serious mistake to limit our fraud prevention tools in the system. Secretary Yellen, given that the Bureau's proposal may severely impact the ability to prevent fraud and conduct identity verification, has the CFPB spoken to anyone at FinCEN or Treasury regarding its SBREFA proposal?
I'd have to ask. I don't know what contact there's been. I have not talked to Director Chopra about this, but my staff may well have done so.
If they haven't, will you commit to engaging with the Bureau on this?
Certainly, I'm happy to look into it.
All right, because I just want, wouldn't it make sense, though, that for the Bureau to minimize its impact on the Bank Secrecy Act compliance and other law enforcement and privacy statutes?
If it has that impact, it would make sense.
All right, I appreciate that. Thank you very much. Over the last 2 decades, China has unleashed a global lending spree, mainly through its Belt and Road Initiative, showering mostly developing countries with hundreds of billions of dollars in an effort to expand its influence and become a political and economic superpower. China's opaque loans differ from most other loans to developing countries by advanced nations or institutions like the World Bank. They usually carry higher interest rates and shorter maturities, requiring financing every couple of years, and frequently using national assets as collateral. As more countries are on the cusp of default, raising interest rates are only going to make it more expensive to pay off debt denominated in dollars and other key currencies. Secretary, what should the role of international financial institutions be in addressing the needs of those that have outstanding Chinese debt and are currently in desperate need of relief from Beijing?
We're working extremely hard to relieve the debt burdens of low-income countries that clearly need to restructure their debt and are trying to do so in the context of an IMF program. And as you say, China is often the holdout and the most difficult lender to deal with. We have been addressing that in all that we do. It's a topic I've raised in all of my bilateral meetings with my Chinese counterparts. We've raised this with the IMF and World Bank. A sovereign debt roundtable has been created to deal with some of the issues that China continues to raise in multiple debt restructurings. And while I still have serious concerns, some progress has been made in the context of common framework debt restructurings. So Zambia, Ghana, for example, are countries where progress has been made. China's come to the table, but there is more to do, clearly.
You've said that, you've spoken to the World Bank and IMF about this. Estimates peg China's lending to developing world at $1 trillion, which makes them a bigger lender than the World Bank and IMF. But China is still considering emerging and developing economy under the eyes of the IMF. Do you believe that the U.S. should now use its influence in international organizations to change China's status as a developing country, specifically at the IMF?
I guess I need to look at that. I'm not prepared to give you an answer on that.
All right, well, again, it's my understanding that the IMF considers China an emerging and developing economy, which allows them better terms under certain loans. And if they're giving out $1 trillion a year to other countries, I think we should look into it.
We oppose in the World Bank and all of the MDBs any lending to China whatsoever, given China's income level and extensive lending around the world. And we've pushed and they have reduced very substantially the lending that they do. We vote against all of it.
Thank you. I just want to say this statement. International banks play an important role in our nation's economy, particularly New York. I recognize that Basel III Endgame is not in your current jurisdiction, but financial impact of these rules cannot be understated. I would encourage you as Treasury Secretary to talk with banking regulators and other FSOC members about the impact of these rules.
Gentleman's time has expired. The gentleman from Georgia, Mr. Scott's recognized for 5 minutes.
Thank you, Chairman. And Secretary Yellen, you remember the last time you were here, I raised concerns about the balloon going over the United States by China and how concerning that was. Since that time, this issue of national security and agriculture is going hand in hand. Our farm bill and my good friend, Chairman G.T. Thompson, and I, our two leaders on ag, have framed this as a national security issue. And here's why. The FBI has now labeled the Chinese government's action as the greatest threat when Director Christopher Wray warned us in April that he said, and I quote, that Chinese hackers have infiltrated U.S. critical military and infrastructures and are now poised to cause significant damage at any given moment's notice. So we've got a national security issue here of soaring magnitude. And we're working in a bipartisan way, obviously, to solve this problem. So I want to ask you some specific questions here. Under your proposal going forward, you have now more than 50 new facilities that will be added to the list of sites where surrounding property transactions may be reviewed by the Committee on Foreign Investments, and now it's totaling 227. So I want to thank you. You all are moving, and this has to be our #1 national security issue, largely because it's a delicate dance. Many people don't know. We do know China is our greatest threat, but it is also our greatest and largest trading partner. So it's a very delicate dance that we have to do. Now tell me, how did your committee ultimately decide which military bases would be included in this latest expansion?
We worked very closely with the Department of Defense in issuing the notice of proposed rulemaking that came out yesterday, and they undertook a comprehensive assessment of military installations and considered a number of factors, operations, assets, missions, training at each installation, and what was appropriate in terms of coverage under CFIUS.
Pardon me, I want to get to a couple more. My understanding is that 3 or more military installations were removed from that list.
Congressman, my understanding is that nothing is actually removed from the list, but when areas were expanded or new bases were added to the list, some existing bases may have fallen within the radius of another base that either was expanded or added. I don't think that there were any bases that are actually removed.
Okay, now let me ask you this. To the best of your knowledge, is there any indication that the Chinese government is looking beyond land purchases and farmland and expanding into buying either other types of small businesses around military bases? And I also want to thank you for working with my staff on this issue, and I hope that we continue to work together because it is now the #1 issue facing us as far as agriculture is concerned, and now as far as the whole national security of our nation.
So I can get back to you on whether or not we're looking at small businesses.
Thank you.
I believe that would be within the scope of CFIUS.
I look forward to working with you.
Gentleman's time has expired. Recognize the gentlewoman from California, Ms. Kim, for 5 minutes.
Thank you, Chairman. Secretary Yellen, thank you for joining us today. As you know, the House unanimously passed my bill, H.R. 540, the Taiwan Non-Discrimination Act. This will support Taiwan's membership at the IMF, where the statehood is not a prerequisite to join the international organizations. And the IMF has no conditions where statehood is not a requirement. And as you know, Taiwan is already, it belongs to WTO and the Asian Development Bank. So if Taiwan seeks its membership at the IMF, would you support it?
Well, Taiwan has not expressed any interest in joining the IMF. This is not a decision that the United
With
States
all due respect,
government.
Secretary Yellen, that's why we passed the Taiwan Non-Discrimination Act. And we are hoping that you will work with us and fully support Taiwan's membership at the IMF. And obviously, it goes without saying, the world would benefit from having the input and expertise of world's 21st largest economy. So I hope you will work with us. And the legislation is already passed out of the House.
Sure. I guess what I can say is that we have supported greater engagement between the IMF and Taiwan, even with Taiwan being a non-member.
Thank you.
We have urged
And I urge you
surveillance
to-
activities
yes.
and other IMF activities to work with Taiwan to include
Taiwan has
them.
indicated their expressed interest to join. So when that happens, I hope you will support that. So let me move on to the next question. Since this is something that I know Representative Garbarino mentioned this earlier, so I echo his comments. But to address the growing problem of indebtedness of low-income countries, G20 nations and the Paris Club agreed to the common framework with the CCP. So can you speak of any of your efforts to force the CCP to make its sovereign lending more transparent through the common framework?
So we have engaged thoroughly over a long period of time and deeply in every way we can with China to bring them to the table to participate actively in restructurings through the common framework. It's been frustrating, but I think that there has been some progress. We've urged the IMF, the World Bank, they've set up a sovereign debt roundtable in which it's a forum to discuss issues that China routinely raises that aren't really case-specific, but broader. And
Thank you.
I think we've made some progress there.
Thank
And
you.
there are several countries
Thank
where
you,
we have
Secretary.
achieved.
Let's continue to be more vigilant in making sure that like-minded countries and with our allies that we can force CCP to be more transparent. I'm going to move on to the next question. We cannot afford to cave into CCP demands that private creditors should be ignored in debt restructuring negotiations. There should be comparable treatment between public and private creditors. As you know, private capital is a powerful tool to counter the CCP's debt diplomacy. Earlier this year, the US and CCP launched the bilateral counter-narcotics working group to counter the manufacturing and trafficking of all illicit synthetic drugs. But I'm afraid that we are giving away some of our leverage by lifting some sanctions. And once again, we're yielding to the empty promises made by CCP officials. So can you tell us about the role of Treasury and your role in the working group?
Well, we participate in the counter-narcotics working group, and Treasury has also, under the auspices of a financial working group we've established with our counterparts led by the People's Bank of China, an anti-money laundering forum where we're working on best practices and also relates to counter-narcotics. So we have seen China take some action against firms that are involved in producing
I know late
precursor
last year when
chemicals.
Xi Jinping and President Biden met, they also started the fentanyl working group and narcotics working group early this year. But we know from experience that we cannot solely rely on the commitments made by Xi Jinping and CCP officials. So I hope that you will do more to ensure that the CCP abides by the commitments that is established by working group. And I know you are participating, but please be more
Yes, and
firm.
we've taken actions ourselves against Chinese firms on this.
Thank you. My time's up. I yield.
Lady yields back. With that, we go to the gentlelady from Ohio. Ms. Beatty is recognized for 5 minutes.
Thank you, Mr. Chairman and Ranking Member. Secretary Yellen, I would just like to make a quick comment about FinCEN's beneficial ownership reporting rule, which has been discussed by many of my colleagues this morning. I know you're collecting the data to protect our national security and our financial system, and you're doing it because Congress actually mandated it in the Corporate Transparency Act. However, I too am concerned that many of our small businesses don't know about this new requirement, but I'm going to do my part to spread the word and to educate the business owners in my district. As a matter of fact, I'm excited about hosting Undersecretary Nelson and Director Gackey in Columbus next week for our FinCEN Small Business Information Session. We may want to get a little quote from you in light of your words today to help relax some of them that this is not an attack on them.
Thank you for participating in this. It's much appreciated, and we want them to know about it, but we're not looking to penalize small businesses that learn about it and take the actions they need to file.
Okay, well, thank you for that. We will certainly, in my opening remarks, include that in sharing that with the businesses, because we found out that many of them absolutely have no idea about this reporting. Right. But the good news is there were some who not only knew about it, and they had actually completed their transparency forms. So we're going to continue.
It's pretty simple filing for a small business.
Well, thank you. Let me now go to the first question I have. Secretary Yellen, the World Bank's International Development Association, or IDA, as you know, is undergoing a replenishment this year. As the largest single provider of development finance to the poorest countries, IDA is essential to addressing the most critical development challenges and setting high standards across the field. What role does IDA play in addressing the critical challenges caused by climate change in developing countries, and how is Treasury pushing IDA to advance its development priorities for the next 3 years?
Well, it plays an absolutely critical role in providing concessional finance to the poorest countries, and it addresses a wide range of needs, from food insecurity to education to climate to pandemic preparedness and other things. We look forward to an ambitious IDA 21 refinancing, and we want to make sure that the funds are used effectively given the enormous pressures that these countries are under, given all that's happened in terms of climate change and also in terms of pressures on food and energy prices.
Okay, thank you. Secretary Yellen, under President Trump, the United States became more isolationist as it exited NATO and engaged in close contact with dictators. How has the United States Treasury under the Biden administration helped restore and reassert U.S. leadership in global economy?
Well, thank you. Since day one, it's been a priority at Treasury for us to work closely and collaboratively with other countries around the globe to address common problems, whether it's food insecurity, development aid for countries so that they can grow, addressing debt problems, addressing pandemic preparedness. We've worked closely on trying to set a floor on corporate income tax rates globally to stop what's been a decades-long race to the bottom. So, and certainly when it comes to our support of Ukraine, the United States has shown global leadership, and we've worked very closely with our global colleagues on support for Ukraine and sanctions against Russia. So a wide range of things. That's just a very partial list. And we really tried to turn the clock 180 degrees in terms of our cooperation and involvement in international fora.
Thank you, and my time is up.
Gentlelady's time's expired. With that, we go to the gentleman from Nebraska, Mr. Flood, recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Madam Secretary, for being here today. Before I begin, I want to make a brief statement on something that is admittedly not within the scope of this particular hearing, but is very important to my district and agriculture producers across the country. With the 45Z clean fuel production credit going into effect in less than 5 months, Nebraska's agriculture and energy producers need full and accurate guidance promptly. I was disappointed to see Treasury release guidance in April for the 40B Sustainable Aviation Fuel Credit that rejected the best available scientific data and tied the hands of our nation's ag producers with an unworkable one-size-fits-all limitation. Nebraska's farmers don't need the federal government to come in at the 11th hour and dictate which practices are acceptable and not acceptable, and I will continue to advocate for greater flexibility that fully recognizes the role Nebraska's producers play in the future of transportation fuels and for an all-of-the-above energy policy that puts our farmers first. I plan to submit some questions, Madam Secretary, for the record on this issue and would appreciate a quick response. Switching gears, Secretary Yellen, in response to a letter from Chairman McHenry, among others, regarding FSOC's calls to fill the spot market gap in digital assets, it was noted that, quote, crypto asset platforms engage in practices commonly subjected to greater regulation, including operating order book style markets and custodying crypto customer assets. end quote. Those activities sound a lot like activities undertaken by centralized intermediaries, and centralized intermediaries are undoubtedly an important piece of the regulatory puzzle for digital asset regulation. That's why this committee and the Ag Committee collaborated together on Fit for the 21st Century, which provides a new regulatory framework with sufficient responsibility and resources for the CFTC to effectively regulate spot markets for digital assets that are not securities. However, I think it's important that we think about some of the unique characteristics in decentralized systems as well. These protocols will allow willing buyers and willing sellers to find one another and make a trade based on the rules of the protocol to any of the market participants. Here's my question. How do you think about decentralized trading protocols that do not create order book style markets or involve the custody of customers' crypto assets? Wouldn't these markets, which are unique relative to most of our understanding of traditional centralized markets, require a different approach to regulation?
You're talking about DeFi type of activities and
We have to recognize there's going to be a decentralized angle to all of this in digital assets, and so far everything seems very centralized, so yes.
your question is, what about the regulatory approach to those markets?
Well, how are you thinking, when you look at this whole regulatory regime, how do you think about decentralized trading protocols, basically, that do not create order book style markets or involve the custody of a customer's crypto assets? Have you given that a lot of thought?
Well, this is certainly something that the regulators are looking at, the SEC and to some extent the CFTC. Perhaps some of these activities may fall under the regulatory umbrella of the banking agencies as well. And
I would add this, Madam Secretary. FSOC released a report in late 2023 dedicated an entire section to the risk associated with digital assets. One such risk the report mentioned was quote-unquote concentrated risk. I'd like to focus on a couple aspects of concentration risk that I'd like your view on. If there are only a small number of entities that are able to serve as custodians of digital assets for registered investment advisors, would you agree that such an arrangement could constitute a concentration risk?
it could potentially, but I'd need to know more about the details.
I will note that a witness representing the registered investment advisors spoke in front of the Digital Asset Subcommittee panel early last year and testified that his firm had, quote, 3, maybe 4, end quote, options for digital assets custody currently, and indicated the number could reduce with the SEC's custody rulemaking. I guess, Madam Secretary, in the time I have left, if there are only a small number of entities that are able to serve as custodians of the now approved spot Bitcoins ETFs, would you view that arrangement as a potential concentration risk?
I just have to know more about the details. I'd need to really look carefully at the case you have in mind.
I will leave with this. I emphasize there are only a handful of custodians for spot Bitcoin ETFs, and most issuers only have one custodian. With that, Mr. Chairman, I yield back, and thank you for your time.
The gentleman yields back. With that, we go to the gentleman from Illinois, Mr. Caston, recognized for 5 minutes.
Thank you, Mr. Chair. Madam Secretary, so nice to see you here again. I'm grateful for your time today. I want to chat about this ongoing risk from climate change in our financial markets, and specifically to what's happening in insurance sectors. There's been a lot of reporting that I'm sure you've seen a lot of. New York Times said that I think homeowners property insurance firms lost money in 18 states in 2023, so a third of our union.
Yeah.
At least as far as the Senate counts things. In Texas, home insurance rates went up 23% in 2023. We've seen 15 companies that just left Florida after Hurricane Ida. 12 insurers went totally insolvent after the hurricanes in 2021, and 20 in Louisiana. And I think, and we've had this conversation with you, with your staff, whether this presents a systemic risk to the GSIBs is one question, but with over a third of Americans' wealth tied up in their homes, it's clearly disruptive. I'm grateful for what the Federal Insurance Office is doing to try to get the data. I have some concerns, though, that the data call from FIO is relying on the National Association of Insurance Commissioners, and I've heard, I don't think this is public, but I've heard anecdotally and privately from folks who I trust that there's at least 9 states that are not participating in that data call. And without getting, and those states tend to be ones that are most exposed to climate risk. So I guess what I'm wondering, my first question is, are you aware of those data gaps in the FIO data call? And what can FIO do to fill in those gaps to make sure we get a robust picture of where the financial risks are?
Okay, so I knew that a couple of states were not participating, but I thought it was the case that most of the states where there are great concerns are participating. I'm happy to look into that in greater detail and get back to you.
Okay. I don't know if that's public, but maybe we can share with staff what we're hearing and we can just compare notes and see
I mean,
what we're seeing there.
FIO and the NAC were able to collaborate, and we thought that was a better approach to trying to collect detailed, meaningful data that would give us insight into this problem. And so that's the route we've taken. We expect to learn a lot from this data collection, and as you say, it is potentially a very serious problem.
Are you able to get, I don't know if you saw, there was a New York Times story today, but it referred to a National Bureau of Economic Research paper from last month. I think Keyes and Mulder were the authors, but they essentially looked at insurance payments that are made and were able to subtract out public information on property tax and mortgages to get the inferred insurance that was paid as part of the escrow.
I have not, I'm sorry, I haven't seen that.
Well, check out the New York Times today. It's fascinating because it would seem to imply that there's a way to back into the data, at least as far as what's happening with this rates and where some of the exposures are. And we can get wonkier here than our time will allow, but it seemed to suggest that there's a real dichotomy between states that have a very pro-consumer regulatory structure that are therefore not keeping rates high enough to attract business, and states that have a very pro-insurer regulatory structure that are letting antitrust issues run amok and driving rates up. And meanwhile, there's all this
state regulatory regime, I think, definitely matters to what's happening in individual states.
So I mean, I guess sometimes 5 minutes bothers me. We should have longer conversations. The concern I have is that insurance is going to be this canary in the coal mine, except it's more like a gorilla in a very small closet, I guess. It's all regulated at the state level. In theory, we've got FIO. In theory, I think this committee has jurisdiction over insurance generally, whatever that means. But it just feels like this huge whack-a-mole where we're trying to get data. And I'm curious if you think that you or FIO or maybe more broadly FSOC, do you have the authority just to get and ask the right questions so that we can understand where these risks are pooling, or do we need to find other workarounds, maybe even more regulatory fixes?
Well, FIO has looked very carefully at this and considered whether the collaboration with the insurance commissioners was an adequate way to collect this data, and on balance felt this was the best approach and that we would collect information that would be very useful and provide a lot of insights. As you know, this is normally a state matter and not a federal matter, but there have been increasing calls, and given what's happening, I think the federal government should be looking very carefully at this, not just to provide information, but because there may be a call for federal action.
Exactly. I see where the risk is pulling. Out of time, yield back. Thank you very much.
Gentleman yields back. With that, go the gentleman from Iowa. Mr. Nunn is recognized for 5 minutes.
Thank you, Mr. Chair. Thank you, Madam Secretary, for being with us today. I want to highlight, I think we all agree that national security is at top of list, certainly at Treasury and here in Congress as well. And national security means standing up to Russia, China, Iran. It's not about overly burdening small businesses in my home state of Iowa. So let's get started today. I want to thank Secretary Yellen. My home state has 270,000 small businesses. In fact, it makes up 99% of our businesses in Iowa. And they're facing a tremendous amount of paperwork coming largely from the Treasury, which is why we invited Director Gecki to come out and hear directly from Iowans. And she did a great job, but she also got an earful. She heard and admitted that FinCEN has alerted only 2 million of more than 3.2 million small businesses of their obligations. to be able to fill out beneficial ownership. That is an abysmal number, particularly when we have less than 6 months left in your timeline to help be able to execute. So here's my ask today, Madam Secretary. Would you support, our bipartisan Small Business Red Tape Relief Act, which would extend the deadline for small businesses to be able to be compliant with Treasury?
Well, FinCEN has 2.7 million reports so far, and they are engaging in a very extensive outreach and education effort, and it's their judgment that it's not necessary to extend the deadline.
Madam Secretary, I appreciate that. Let me share with you what was delivered directly to Ms. Gacke. The very fact that we have only alerted 2 million over more than 30 million is harmful. If they fail to meet it in the next 6 months, it will be $500 a day to small businesses. We're not going after the bad guys. We're going after small businesses in Iowa. I would ask you, as the Treasury, extend this deadline and work on a bipartisan level with us to make sure that our small businesses are taken care of. I hope you hear me on that.
Well, look, we're not trying to go after small businesses that do the best to meet their responsibilities.
Most of them don't know what their
Because
responsibilities are because they've not been informed by FinCEN at this point.
So the CTA penalizes willful violations of the law, and we're not looking to take some sort of gotcha enforcement actions against small businesses.
I
to
certainly
do
hope
their
that's
best.
the case because my folks back home see a $500 fine per day as a pretty not only gotcha, but as a very painful impact. So in that vein of setting deadlines, one of the things I would ask Treasury is, will Treasury be able to meet their November 1st, 2024 rulemaking deadline on 45Z, the Clean Fuel Production Credit?
They're working, this is the successor to the sustainable fuels.
That's correct.
So that's something that Treasury is working on. I can't give you an exact, there are
I hope you meet your
many-
deadline, Madam Secretary, because you've laid out a very strict $500 a day deadline for small businesses in Iowa that work largely in renewable fuels. I hope that Treasury can meet its own deadline that you've laid out of November 1st. I'd like to change briefly now to Iranian illicit oil sales. I think we've all seen the threat in the Middle East, both what it's done for Hamas, Hezbollah, the IRGC. Americans have died. Americans are still in the firing line. Treasury's at the lead for sanctions. Can you tell us today, are there any U.S.-based firms providing insurance to Iran's illicit ghost fleet of oil tanker ships?
I can't speak to particular entities. What I can say is that we are working to crack down.
Let me give you what the New York Times has, Madam Secretary. A list of 27 tankers currently supporting the illicit sale of oil from Iran to some of our worst adversaries. General Michael Kurilla of CENTCOM noted that Iran continues to sell 90% of its oil directly to China and fund a terrorist war in his AOR as a result of this. I have asked 5 times now for Treasury to be able to find a list, both in the classified and unclassified versions, of how we are cracking down on insurance violators here in the United States. Are we going to be able to do anything, or are you going to be able to have an answer for us on the insurance companies here domestically based that are providing insurance to a terrorist regime?
I mean, most of the insurance companies that I'm aware of that do this are outside the United States.
But there are ones here in the United States, you would agree?
But I'm not able to comment on specifics of
I would like a follow-up. Thank you,
investigations
Mr. Chair. I
that
yield my time.
we're doing.
Chairman's time's, the gentleman's time has expired. With that, go to the gentleman from New Jersey. Mr. Gottheimer is recognized for 5 minutes.
Thank you, Mr. Chairman. Secretary Yellen, the average price of childcare in this country is now higher than the average cost of rent. In my home state of New Jersey, the average family pays more than $440 a week in childcare costs. What forms of tax relief are available for hardworking families struggling with these high costs, and what is the Biden administration doing to combat the effects of these rising costs, please?
Well, we certainly have proposed extending the child tax credit which was immensely helpful, and we're supportive of the legislation that has gone through the House. Would urge action in the Senate that would extend the child child tax credit along with other provisions.
Thank you. And I think it would be great if we could actually get that passed. It would lift 400,000 children above the poverty line. Switching gears a little bit, following on the questions that were just asked, I applaud your recent decision to impose additional sanctions on a shadow banking network that has enabled Iran to fund proxy terror groups, including Hamas, Hezbollah, and the Houthis. Holding Iran accountable has been a top priority for me and for many of us, which is why I was proud to help pass the bipartisan Iran-China Energy Sanctions and Chip Acts. Can you elaborate more on these sanctions and additional action the administration is taking to reduce the risk of Iran-funded terrorism against America and our allies?
Well, we've taken a wide array of sanctions actions to try to stop the flow of illicit funds from Iran that funds terrorist groups, the Houthis, Hezbollah, and others. We've worked jointly with other countries to impose we really using every tool that we have to crack down on that, as well as sources of revenue, including oil revenues that enable Iran to have the funds to distribute to these terrorist groups.
Do you think we need to do more to address cooperative sanctions evasion between Iran and our other adversaries, including Russia, China, and Venezuela?
I'm sorry, what specifically do you have in mind?
What are we doing? Are we doing anything there? Is that something that's on your front burner that you're concerned about, the sanctions evasion?
We have taken, we know that there are oil shipments that Iran has, and we've recently taken, we have systematically tried to shut that down and recently taken very significant actions that military groups in Iran have used to support their activities through oil shipments.
Thank you. Madam Secretary, are you familiar with the recent state laws that require banks to provide an explanation with specific reasons for closing or denying an account, including in situations where the decision was related to financial crimes risk?
Yeah.
I'm concerned that these state laws may conflict with federal requirements, especially the obligations that banks have under the federal anti-money laundering laws that prevent terrorists and illicit financing in the U.S. financial systems. I presume you share those concerns?
Well, it's a federal obligation to file suspicious activities reports and comply with the requirements of the Bank Secrecy Act, and that's something that we require and expect all banking organizations to do.
Are you doing anything to address this issue, this conflict here?
Well, I'm certainly stating that it is an obligation of banks and that we would enforce.
Chair, I'd like to enter into the record a bipartisan letter signed by my colleagues on this committee, Representative Lukemeyer and Sherman, please.
Without objection.
Thank you. We urge you and your counterparts, the OCC and FinCEN, to look into this issue, please, and act. And I hope, if it's okay, I'd love for our teams to sit down together and talk about actions that we can take.
Be glad to do that.
Thank you so much. In my last 30 seconds, I just want to zoom in on a terror financing issue for just a minute. With respect to Iran, do you agree the IRGC's designation as a specially designated global terrorist organization, as a foreign terrorist organization, should not be lifted until such time that it has demonstrated that it has permanently ceased the conduct for which it was designated in the first place?
I mean, that's something I haven't, the exact requirements I haven't looked into, but that's probably reasonable.
And I'm concerned about that, and of course, looking at the UNRWA employees who participated in October 7th, and I hope you're looking at that as well.
Well, we think that those who were responsible for the atrocities should be held to account.
Thank you. I yield back. Thank you.
Gentleman's time's expired. With that, go to the gentleman from New York, Mr. Lawler. He's recognized for 5 minutes.
Thank you, Mr. Chairman. Madam Secretary, when was the last time you met with President Biden in person?
I'm not going, I meet with President Biden over a wide range of issues, the economy, China,
When was the last time you
Russia.
met with him in person?
I'm not going to comment on my meetings with the president. Those are private.
Well, as a cabinet secretary, have you noticed any mental or cognitive decline in any of these meetings?
The president is extremely effective in the meetings that I've been in with him. That includes many international meetings that are multi-hour, like his meetings with President Xi. I've met with him, with other leaders who are in
So are you
Washington
testifying
and
that you have
elsewhere.
not seen any mental or cognitive decline?
Mr. Chairman, point of inquiry, she's not a physician.
She's a member of the
She's
cabinet.
not, you're asking her a
Let's-
medical
let's-
question.
Let's keep the comments to the subject.
It's
today.
not a medical question. It's her interpretation as a member of the cabinet.
What I,
I'm
Can
just
I move
asking
to
what
have
your
those
testimony
words
is.
taken down? Mr. Chairman, I move to have those
That's
words
it.
taken down. She is
Listen.
not a physician.
Will people please not go between the witness and the committee? Okay. Mr. Lawler, she's answered the question. Let's move on. You're recognized for the balance of your time.
Thank you, Mr. Chairman. Madam Secretary, have there been any discussions among cabinet secretaries about invoking the 25th Amendment?
no.
Okay. The supplemental appropriations bill
She has a
enacted
request
in
to back
April
it, so
contained two of my bills, the SHIP Act, which requires the imposition of sanctions on foreign ports and refineries that knowingly process Iranian oil, and the Iran-China Energy Sanctions Act, which requires you to close correspondent accounts for Chinese banks if they are involved in petroleum transactions with the Central Bank of Iran or another sanctioned Iranian financial institution. This applies no matter how minor or infrequent the transaction may be. In March, General Kurilla, the head of CENTCOM, testified before the Armed Services Committee that Iran continues to sell 90% of its oil to China, funding Tehran's subversive activities across the region. That is a quote. Anyone who participates in the sale of Iranian oil plays a role in helping the regime evade U.S. sanctions. Engaging in this trade is tantamount to aiding and abetting a terrorist state, and it must end. These sanctions create a significant financial incentive for ports and refineries to stop dealing in Iranian oil, or else lose access to the U.S. economy. Since Joe Biden took office, Iranian oil sales are up over $100 billion. $100 billion increase. Can you speak to where you are in implementing these laws, the SHIP Act and the Iran-China Energy Sanctions Act, and will you commit to swiftly implementing these sanctions as required by the law?
So I need to look into the details of where we are with respect to these particular acts, but we have put in place a wide array of sanctions on Iran, including for oil dealings. We have sanctioned firms in other countries that are involved with the Iran oil trade, and we are constantly evaluating additional sanctions to put in place.
Since the supplemental aid package passed, have you had any meetings on the SHIP Act or the Iran-China Energy Sanctions Act?
I have regular meetings with my staff.
Have you had any discussions on those two provisions of the supplemental?
I've discussed with them Iranian sanctions.
Specifically, the SHIP Act and the Iran-China Energy
Honestly,
Sanctions
that's
Act.
not the way we organize our discussions. We talk about our Iranian program and what we're doing.
So I'm going to interpret your answer as to be no, you have not had discussions on the SHIP Act and the Iran-China Energy Sanctions Act, and the Treasury Department has not advanced sanctions with respect to those two laws.
I have not said that.
Well, is it yes or no?
I have had discussions with them, and it's covered a wide array of sanctions issues in connection with Iran. I'm not sure specifically which actions have to do with which aspects of the law.
I sent a letter.
And that's not how it's presented to me.
I sent a letter specifically on the SHIP Act and the Iran-China Energy Sanctions Act to you and Secretary Blinken a few weeks ago. We have not heard back. We certainly would appreciate a detailed response as to what has been done to implement the law that was passed under the supplemental aid package. And in my remaining time, have you communicated the sanctions risk to Beijing at all with respect to the Iran-China Energy Sanctions Act?
We have discussed with them our concerns about Chinese businesses and others involved with.
But not
these
specifically
matters.
on the Iran-China Energy Sanctions Act?
We have discussed an array of sanctions issues.
Okay.
Gentleman's time has expired. Just a reminder to the committee that getting into the personal business effects of the president as well as Mr. Trump is inappropriate for this committee. With that, we'll move to Ms. Tlaib from Michigan. She's recognized for 5 minutes.
Thank you, Mr. Chair. Thank you, Secretary, for being here. As you probably know, many of the countries in the global south are facing a tremendous debt burden. I think that's almost half of the world's population right now. About 3.3 billion people are impacted by this, living in countries that spend more on the interest on their debts than the healthcare or education in their communities. And you know, an IMF issues fees called surcharges on heavily indebted countries. Secretary Yellen, do you believe that developing countries suffering through perfect, storm of global crises, including shocks to the food and fuel prices, soaring interest rates, climate change, and so much more, should be required to pay these fees on top of the interest they pay on their debt?
Well, the surcharges framework we think is important to create appropriate incentives to repay the IMF in a timely way and to contain borrowings. But the IMF, with our support, is currently reviewing
That's right. Do you support
this
that review?
policy.
Do you support that review?
Yes, we are supportive of the review.
Can you explain to our residents what the special drawing rights are at the IMF?
Special drawing rights are essentially a system in which countries agree to provide lines. The way I think of it is providing countries with additional lines of credit that are in proportion to their quotas at the IMF. And
I love telling my residents that it actually it would provide immediate relief to countries across the globe while costing the U.S. payer nothing, absolutely nothing. Is that correct? Does it cost our U.S. taxpayer any money?
No, we earn interest on if we provide hard currency for special drawing rights, we earn interest on that, and it doesn't cost us anything.
And Secretary Yellen, I've heard is the United States actually standing in the way of new issuance or looking at the special drawing rights?
Well, we thought at the onset and after the pandemic struck, which hit so many countries, created a global shortage of liquidity, that an SDR allocation was appropriate, and one took place, a large SDR allocation. At this point, we don't think an SDR allocation is needed or appropriate.
So you don't think a new issuance is required? I mean, I don't want to send a message that our country, Secretary, that our message to developing countries that the U.S. is unwilling to respond to the debt crisis.
We've been very supportive of an expansion of the Poverty Reduction and Growth Trust.
But why not just help them? I don't understand.
Well, it does help them because it gives them interest-free loans to the countries that are most in need.
So more debt. So the way the international financial institutions are governed is inconsistent.
Well, it's debt. SDRs in a way are debt too, because countries that use them do have to pay interest on them. So it's not that different.
Yeah, the way the international financial institutions are governed is inconsistent. with the democratic ideals we seek at home. And in the IMF, for example, the US and other G7 countries get 41% of votes, despite only having 10% of the global population. So Secretary Yellen, what would you say to countries who feel we don't practice that what we preach when it comes to democratic decision-making into international financial institution?
So we have certainly been supportive of governance reforms that increase the role and the voice of borrowing countries so that they have more say in representation. We've supported adding directors who represent low-income countries, and we've supported the idea of reviewing the formula that would determine quota allocations in the future. We've been opposed to ad hoc quota review that would reallocate in a sort of ad hoc way voting rights, but we are supportive of the IMF reviewing the formula that determines voting rights.
Thank you, Secretary. I yield.
Lady's time has expired. With that, we go with the gentlelady from Indiana, Ms. Houchin, recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you to the ranking member, and thank you, Secretary Yellen, for your testimony and being here today. Like many of my colleagues, I have concerns about the ways in which this administration continues to support policies and practices at international financial institutions that do nothing to further American interests and instead seem to only help China and our competitors continue to make gains at our expense, from allowing mission creep into social and climate issues to giving our adversaries the upper hand in key geostrategic regions. This administration has been allowing America's influence abroad to be undermined, and it has to stop. Starting with the 1st of this month and running until the end of next June, the World Bank is aiming to devote 45% of its financing to climate-related programs. In the bank's latest annual report, climate was referred to some 200 times, largely in the context of the bank's green energy investments and reducing the reliance of developing countries on fossil fuels. At the same time, China has been taking an all-of-the-above approach to energy investments, pushing renewable energy while also developing oil and gas resources. One of our foremost concerns when it comes to China and the CCP is the extent to which they exert their influence over developing countries by providing funding for basic necessities when half the population of sub-Saharan Africa does not have access to electricity to begin with. It's not hard to see why China's influence in that area might be growing. Secretary Yellen, if 45% of the bank's resources are chasing arbitrary climate targets, why wouldn't developing countries keep looking to China and to Chinese lenders to meet their core developmental needs?
Well, the World Bank and the MDBs are heavily focused on broad development goals, relieving poverty, and ensuring sustainable growth. But achieving those goals is also linked to addressing climate, which is increasingly compromising the development goals, especially in the poorest places. And climate and access to electricity are linked. At the spring IMF World Bank meetings, President Bonga—
Secretary Yellen, I'm sorry, I only have 5 minutes, so I'm going to go on to another question. 60% of the U.S. electricity generation does come from fossil fuels, but as part of this administration's climate agenda, you are voting against virtually all World Bank fossil fuel projects in Africa. Why is the Treasury holding Africans to a standard that the wealthiest countries in the world cannot meet?
This reflects the goals that Africa itself has, that very often, most often, renewables are the cheapest way of developing energy. And it's a question of bringing electricity. In Africa, 600 million Africans lack electricity, and renewables both address climate change and resilience and are the cheapest way of bringing electricity to those who don't have it.
Okay.
There's a goal of
One of one of the most egregious examples of the World Bank empowering China in its efforts to expand its geopolitical influence has been through allowing the CCP to overbuild its production capacity in certain products in order to flood the markets to other countries. They've done that with industries like aluminum extrusion, and now they've done it with solar technology. Last May, the president doubled U.S. tariffs on Chinese solar cells. And since the World Bank is aiming to direct 45% of its financing in the next year to climate projects, the bank's money may still just go to purchase Chinese solar panels, batteries, and the like. This seems to be supporting China financially in their efforts to expand their geopolitical footprint. Why is the Treasury supporting this if the department is concerned with Chinese overcapacity and the CCP dominating the market in green energy industries?
Well, we are very concerned and attentive to procurement strategies and make sure that all of the MDBs have open processes and that American firms know American firms rarely bid on
does the
these
Treasury,
contracts, and we
does
want
the Treasury
them to do so.
and the department, do they intend to then roll back the reliance on Chinese solar panels in order to prevent them from profiting financially from the United States in this way?
Well, if American firms or other firms can provide these solar panels and bid on those contracts, then certainly there would be less use of Chinese products in those projects.
We would certainly hope that U.S. companies would be chosen over Chinese companies when it comes to solar panels. Thank you very much. I yield back.
Gentlelady's time has expired. With that, we go to the gentleman from New York, Mr. Torres.
Thank you. Madam Secretary, what impact on Treasury rulemaking do you expect from the loss of Chevron deference? Do you expect the impact to be disruptive, minimal? Is it too early to tell?
Well, I am concerned about the Chevron decision. As the White House has indicated, it limits the use of agency expertise in designing rules or deferring to rules that we put in place subject to congressional legislation. But we intend to go on with rulemaking efforts and protect the American people through those rulemakings. And we're evaluating, our legal team is evaluating whether or not there is specific implications. I'm not aware of anything specific so far.
I have a question about the semiconductor arms race with China. According to a report by the Boston Consulting Group and the Semiconductor Industry Association, by 2032, the United States will account for 30% of advanced semiconductor production, compared to only 2% for China. Do you believe, as I do, that these projections demonstrate the success of the Biden strategy, the combination of CHIPS investment in America and the export controls on China?
I do, yes, I would agree with that.
And Madam Secretary, you've been sounding the alarm about China's overcapacity
Yes.
of legacy chip making. According to the same report, by 2032, China will account for 1/5 of chips in the range of 10 to 22 nanometers and 1/3 of chips above 28 nanometers. What action should the United States take to combat China's overcapacity of legacy chip making, and when should we take those actions?
Well, the recent actions of putting tariffs in place did include some legacy chips. And of course, the Semiconductor and Chips Act is designed to promote additional production in the United States to secure our supply chains and to gain the dynamic benefits that come from producing and learning in the process of production, developing new technologies.
On a separate topic, the Financial Times has reported that Chinese organized crime operates a network of underground banks that launders money for both Mexican cartels who are trafficking in fentanyl and Chinese nationals whose capital is fleeing China. Chinese money laundering is essentially financing the deadliest drug crisis in American history, a crisis whose latest death toll surpasses 100,000 Americans. What role is the Treasury Department playing in policing the illicit finance at the heart of America's deadliest drug crisis?
So I certainly agree that it is a national tragedy what's happened with drugs, particularly fentanyl and other synthetic opioids, and Treasury is using every tool at its disposal to try to crack down and reduce the flow of illicit drugs into the United States. That includes by direct sanctions that we put on firms in China and elsewhere that are providing precursors. We have an agreement to work collaboratively with China to reduce the activities of Chinese firms in supplying precursors to Mexico. We're working collaboratively with Mexico. We've announced many new sanctions actions cracking down.
I do worry that the CCP is stringing us along. 97% of the fentanyl precursors are manufactured in China. Xi Jinping has the power to unilaterally shut down the supply chains that account for almost all of those fentanyl precursors. At what point does the United States impose sanctions on China for perpetuating the deadliest drug crisis in American history?
We have seen China take some positive steps in recent months, and we'll try to build on that, but I wouldn't rule out anything in the future.
Thank you, Madam Secretary.
Gentleman yields back. With that, we go to the gentleman from Oklahoma. Mr. Lucas, recognized for 5 minutes.
Thank you, Mr. Chairman. Secretary, thank you for appearing before the committee today. I think you would agree that the health and resiliency of the global financial system is tied to the capital levels of global banks. Treasury's core mission is, of course, to provide for a strong economy and to protect the integrity of the financial system. During our discussion, when you last appeared before the committee, you largely deferred to the Fed, FDIC, and OCC on the details of the Basel proposal. I've been particularly focused on the negative impact the proposal would have on our capital markets that are critical to the U.S. economy. And I hope this is an area that you also are paying close attention to. We're in a situation where the chairman of the Fed today, during Senate testimony, said he still expects major revisions and would like to reopen the proposal for comment. At the FDIC, the current chairman has announced that he'll resign to restore confidence in the agency, while his replacement is awaiting Senate confirmation hearings. And at the OCC, we have an acting comptroller who's not been confirmed by the Senate. At the very least, given the expected revisions, reopening the proposal for further comment seems reasonable. Secretary Yellen, is it still your stance not to take a public position on the details of the Basel proposal?
I'm not going to take a stand on the details. I think that's up to the banking agencies and the rulemaking process that they'll go through. As you noted, the agencies are planning significant revisions in response to all of the comments that they've received, and I'm certainly supportive of their going through that process and revising as appropriate.
Secretary, I appreciate the position you're in, and given your history at the Fed, you are uniquely positioned to understand the far-reaching impact of the Basel proposal and the potential for unintended consequences. Now, shifting focus, I'd like to discuss the U.S. Treasury market. The global financial system depends on a well-functioning Treasury market, the deepest and most liquid market in the world, where any disruptions could create risk across capital markets. You've heard my concern about the Basel Endgame's impact on the Treasury market, paired with the significant market structure reforms coming from the SEC. You've assured the committee that you're monitoring this along with your interagency counterparts. Given the importance of the Treasury market to the United States and the world, we should ensure robust participation. Undersecretary Lang has suggested that excluding excess reserves held in the Federal Reserve System from the leverage ratio would be effective during times of market distress. The Fed did this in 2020, and it was effective. Secretary Yellen, do you agree that there are beneficial reforms that could increase participation in the U.S. Treasury markets?
Well, that certainly is a reform that was worthy of discussion, and I, at the time, thought it was very appropriate to take that step and would be supportive of greater liquidity in the Treasury market. But again, this is a decision for the banking regulators, but I would hope that they would take this into account.
The U.S. Treasury market is the most important market in the world and the bedrock of the global financial system, and I'd encourage you to support those efforts to boost market liquidity and resilience. One last question. Two pieces of legislation led by myself and Representative Luetkemeyer officially added the Secretary of Agriculture to CFIUS and improved the referral process of the agricultural transactions for review. Could you describe how CFIUS scrutinizes transactions in the ag sector and the relationship with the USDA, if you can?
So for land transactions that occur in the vicinity of military installations that have been identified by the Department of Defense's critical ones, there's scrutiny of transactions, and in some cases, there's even been outright, I think you know that in the Mine 1 case that the president ordered divestment of activities that were going on in the vicinity of a military installation. And yesterday, Treasury issued a notice of proposed rulemaking that follows a comprehensive study by the Department of Defense that adds 50 additional military bases and changes the geographic limitations of others.
Thank you, Secretary, and thank you, Mr. Chairman, for the effort that you and I put into making this possible.
Thank you, gentlemen. I think it's, thank you. Gentleman yields back, but I think it is very important that we address this situation. I appreciate your working with us, and I appreciate the Secretary's work on it as well. With that, we go to the gentleman from Nevada. Mr. Horsford is recognized for 5 minutes.
Thank you very much, Mr. Chairman, and to the ranking member, Madam Secretary, good to see you again. Housing remains the #1 issue in my district that I hear from my constituents, but that should be no surprise as Nevada is currently bearing the brunt of this country's affordable housing crisis. Supply, or rather a key lack of supply, remains the driver behind our affordability emergency, which has left Southern Nevada with only 13 affordable and available rental units for every 100 low-income household. This is an unconscionable level of scarcity, and incentivizing construction is the only feasible path forward. It is going to take strong public-private partnerships as well as coordination with housing developers to spur the investment necessary to make housing affordable for everyone. To do so, we must work with the tools available to us to leverage our tax code and make increased construction of these projects feasible across the country. Under your purview is the low-income housing tax credit, one of the most powerful incentives that we have to provide the necessary support for the development of affordable housing. However, I've heard from my local developers that this effective credit can be more efficient, which will expand the population that it can serve. There are necessary improvements that the program could achieve, which are included in my legislation, the Housing Market Transparency Act. The bill would create a central repository for state housing agencies to provide critical information on housing developments, such as the construction costs, quality of living spaces, health and safety information, and ownership data. The public-private partnerships of LIHTC program that make it such an effective method of bringing affordable units to a community also create inherent issues with transparency. So, Madam Secretary, how could Treasury and the IRS make LIHTC more efficient if you were able to capture comprehensive data on these properties? And additionally, what other improvements to the LIHTC program do you recommend to help further incentivize the badly needed construction of more affordable developments?
Well, Treasury certainly supports efforts to improve transparency and accountability that are consistent with legal requirements. And we're very happy to review the bill that you have introduced and try to provide technical assistance. We could work with the IRS on administration of LIHTC and see if there are interactions there that would be favorable. Completely agree about we have a real crisis with respect to affordable housing. I would say generally Treasury is trying to think of how it can use every single tool at our disposal to improve supply of affordable housing. I was in Minneapolis a few weeks ago and was able to announce that we're using $100 million that is income from our investments in the CDFIs to plow it back into affordable housing. And of course, with respect to LIHTC, the president's budget proposes increased funding of LIHTC, which would be very important. The president proposed a program that would expand affordable housing by 2 million units, and love to see that become law.
I agree with the need to build more housing to address the affordable housing crisis. Madam Secretary, I also wanted to note the incredible success from the direct file program. And I am pleased that Treasury recently announced that you will be making this direct file permanent. Nevada had the 5th best uptake of the program of any state in the country. Notably, 90% of the respondents rated that the program was excellent or above average. So I believe that we need to continue to promote the direct file program and expand and permanently reauthorize it so that Nevadans will be able to have that support all year to learn about their options to direct file and to earn the tax credits and benefits that they deserve, especially as we have debates about who should get the tax benefits. It should be the working people of America, not big corporations or billionaires. With that, I yield back.
Gentleman yields back. With that, I will recognize myself for 5 minutes. Welcome, Ms. Yellen. Good to see you again today. We've discussed this issue in the past. My concern initially was the very slow response with regards to sanctions that were put on all the things that could be helpful to Russia whenever they invaded Ukraine. And so I ask you in the last couple times you've been here, in your position as the head of FSOC, is there a committee or a group that's being put together to be able to have sanctions immediately ready to put on China when China invades Taiwan? Our own generals say it's going to happen over the next 3 years. So therefore, I think we need to have a plan in place so it doesn't take several months like it did with Russia, because I think in order for us to be impactful, we've got to do this very quickly. So you've indicated last time you were here that there is a committee that's working on this. Would you like to discuss it a little bit more?
Sorry, there are interagency discussions around Taiwan.
Those discussions include working with our allies to be able to identify different entities, different groups, to be able to sanction and make it more difficult for China to economically continue once they invade and we put sanctions on them.
I'm sorry, I'm not really able to discuss.
I don't want specifics. I just want generalities here. I understand, but I think it's important for us to know, as a committee, to provide our oversight, that there is a concern about this, number one, and number two, that there are discussions going on, and they include allies to be able to address this issue when and if it occurs.
We have many discussions about common issues with our allies, and I would include this in that list, but I'm not able to provide any specifics.
Okay, I understand that. Thank you very much. Next question is a little bit different. What's your greatest concern when it comes to foreign finance issues like this?
When it comes to what?
With foreign finance, we're talking about foreign financial institutions and different issues today with regards to international financial system. What's your greatest concern about all of this?
About foreign financial
Yeah,
institutions?
things that you're involved in, things that are concerning to our country with regards to whether it be CFIUS or whether it be sanctions or whether it be, international, artificial intelligence. What's the biggest concern you have when it comes to international financial relationships and issues?
Well, I have many different concerns, but in the realm of sanctions, we have very powerful sanctions that are available because of the important role of the dollar in international transactions. The ability to cut off foreign banks or other businesses or individuals from the ability to transact through the U.S. financial system and to participate in the dollarized.
Okay, so basically your protection of the dollar is one of your greatest concerns.
I think that that's important, and the more we have used sanctions, the more countries look for ways to engage in financial transactions that don't involve the dollar.
Okay, according to Executive Order 13818, a foreign person is to be sanctioned if the Treasury Secretary finds them responsible for or complicit in or have directly or indirectly engaged in serious human rights abuse. In Russia, with regards to Russia, we sanctioned Vladimir Putin and the foreign minister following the invasion of Ukraine. With respect to the Uyghur genocide, it is Treasury's position that this standard for sanctions applies to with respect to the Uyghurs. Is it Treasury's position that this standard applies for sanctions against Xi Jinping? And if not, why has the Chinese leadership been spared?
Well, we have engaged in sanctions related to the Uyghurs under the force.
Yeah, but the question is, you've sanctioned the leadership of Russia, but you haven't sanctioned the leadership of China. Why? That's the basic question.
This is a basic foreign policy issue that.
Well, sanctions fall under your jurisdiction, so the administration and you working together have not felt that this is important yet.
This is a question I would suggest that you refer to the State Department.
Okay, well, I know that one of our members talked about the sanctions against various banks in China with regards to drug money and laundering Mexican cartel money. I think it's important that we continue that. I sat on the Chinese Select Committee, and it is a really, really big deal that we continue to sanction those banks that facilitate the money laundering of money from the drug cartels, because that's one of the ways we can kind of help thwart that. With that, I yield my time back. With that, we go to the gentleman from North Carolina. Mr. Nickel is recognized for 5 minutes.
Thanks so much, Secretary Yellen, for being here today. I was very glad to hear you commit to Congressman Hill that you'll continue to work with Congress to create a regulatory structure for digital assets, and that you hope it'll reach a quote-unquote good conclusion. I think it's especially important that we continue to work on this issue in a bipartisan way. This Congress, we're on track to be one of the least productive in our nation's history, but this is a place where we've had good bipartisan agreement, and I hope you will continue to make it a priority for this administration. I also want to talk about your role as chair of FSOC and want to echo Congressman Flood's concerns with the concentration risk in the market for crypto custody due to the SEC's misguided SAB 121, which makes crypto less safe for consumers. We have the best banks in the world. They ought to be able to take care of this custodial banking piece. But I appreciate your attention to these important issues. And I certainly want to applaud you and your agency's important leadership on the global stage, seeking to forward American interests, repair alliances, and isolate dictators. First question is about Russian oil. In April, I joined a bipartisan fact-finding mission to Ukraine to show our support in their war against Putin's aggression and unprovoked attack on their country. After I met with President Zelensky, it was clear to me that we need to do as much as we can to prevent Russia from fueling the war with profits from their oil exports. If we fail, we hand over Ukraine to Russia, and we know that an emboldened Putin will continue on to Eastern Europe. The U.S.-led oil price cap has reduced Russian export earnings significantly, but there's a lot more to do. On the whole, we're seeing countries comply with the price cap restrictions, but China, India, and Russia have access to limited non-G7 shipping and insurance services, which don't have to comply with the cap. Secretary Yellen, what is the strategy to address the price cap circumvention, and how do you propose that we hold these countries and entities accountable?
Well, so as you said, at first we had a very big impact on Russian revenues, and then to circumvent the price cap, they invested very heavily in a shadow fleet of vessels and insurance coverage so they would free themselves of dependence on Western services, including shipping. Now that's expensive, and they have really diverted a lot of resources from other uses in order to build that fleet. Then we took the step this past year of sanctioning some of the ships, the SOVCOM float ships that are involved in this trade. And that appeared to be effective in widening the discount that they received on Russian oil. And we continue to look at expanding those sanctions. Now, our goals from the outset with respect to the price cap were twofold, that we want to reduce Russian revenues or alternatively raise their costs of selling oil. And also we want to keep the market well supplied. And so as we contemplate additional sanctions, we really also look at what impact do we think that our actions could have on the global oil market. If our sanctions raised global oil prices significantly, that would be a negative not only to American drivers, but also to countries around the world that are dependent on foreign oil. And so we want to be careful about doing it, but we continue to look at additional sanctions.
Thanks so much. As the world looks for alternatives to Russian and Iranian oil, nuclear energy must play a role. Governments around the world are shifting policies toward nuclear power as clean and a reliable source of 24/7 electricity. I'm very glad the administration has rallied the world and secured pledges from 22 countries to triple their nuclear energy capacity by 2050. Unfortunately, Russia and China continue to dominate the global nuclear market. Meanwhile, U.S. companies are competing against foreign governments without meaningful support from the federal government. When countries in key strategic areas around the world need civil nuclear energy, I don't want them to rely on Russia and China. What should Congress be doing to assist the administration in deploying nuclear energy around the world?
All I can really say here is that Treasury is supportive of using all available technologies, including nuclear. Our role is with the multilateral development banks. They, with the exception of the EBRD, don't touch nuclear, and we have been supportive of having them review their policies in this area.
My time has expired.
Gentleman's time has expired. With that, we go to the gentleman from Michigan. Mr. Huizinga is recognized for 5 minutes.
Thank you, Mr. Chairman and Madam Secretary. Good to see you again. I want to start with an issue that's important to a sizable population in my district in the Battle Creek, Springfield area of Michigan. That is home to about 5,000 Burmese citizens. And last year, the Office of Foreign Asset Control, OFAC, issued a directive that prohibited Americans from providing any such services, directly or indirectly, that would benefit the Myanmar oil and gas enterprise, also known as MOGI. Unfortunately, and I'd like to, Mr. Chairman, submit a copy of that for the record.
Without objection.
And last year as well, in consultation with the State Department, Treasury, you determined that MOGI is a political subdivision of the military junta in Burma. So, in other words, the Burmese government. The MOGI generates $1 billion annually, and by far is their largest foreign revenue for Burma and, by extension, the junta. Unfortunately, late last year, Treasury stopped short of listing the Mogi as a specially designated national, which, as you know, not only blocks the assets, but then puts other countries on notice that they shouldn't be doing business with this designated entity. So, Madam Secretary, why hasn't Treasury used its authority to block the Mogi from receiving financial support from around the world, which is funding an abuse of government? And frankly, what I'd like to know is, what would you have to say to my constituents, and what am I supposed to tell these folks, many who have fled the civil war in Burma, the genocide that's happening, the continued bombings that are happening for their family members that are still in these horrific conditions?
Well, we absolutely are committed to denying the Burmese military sources of funding that they are using to suppress
So why would you leave them
democracy.
Why would you leave them off that particular
we
list?
We did announce sanctions relative to Mogi, and we issued a directive that prohibits U.S. persons from providing financial services to Mogi for its benefit.
I understand, but again, you left them off a list that would have toughened those up. And frankly, in response to that last week, along with my colleagues from this committee, Mrs. Wagner and Mr. Sherman, we introduced a bipartisan Brave Burma Act, which requires the president to determine on an annual basis whether to impose stronger blocking sanctions on Mogi, on the Myanmar Economic Bank, and foreign persons operating in the jet fuel sector of the Burmese economy. That's where those bombings are coming from, and jet fuel is a critical piece to the junta continuing the genocide that's there. So, Mr. Chairman, clearly I believe more work needs to be done, and I look forward to having this bill actually be a part of a markup. But, Madam Secretary, I need you to take a closer look at that because we frankly need your support.
Well, I promise that I will do that, and we certainly are concerned with the situation in Burma, contemplate additional sanctions actions, and we'll work with you on that.
I'm not going to get into this right now, but we have seen some of those sanctions slip in other areas like Iran and Russia, and I'm concerned about that, and we can continue that conversation. I do, and I'm not expecting you to know details about this. This was a letter we sent yesterday, and Mr. Chairman, I'd like to submit that for the record as well.
Without objection.
The letter is concerning significant problems with the enforcement of U.S. sanctions against the Taliban officials. In May, the Special Inspector General for Afghanistan, also known as SIGAR, highlighted that since the failed withdrawal from Afghanistan in August of 2021, $10.9 million in U.S. taxpayer money has been paid to the Taliban in the form of taxes, fees, duties, and utilities. Now, first of all, is there any reason to doubt the IG and his report?
I have not had a chance to review it, and
okay, the report was from
May.
The report was from May. Our letter was from yesterday. So I would appreciate a quick response to our inquiry on this. I think this is a significant problem that we have, and I know in D.C. we talk about trillions and billions, but $10.9 million of U.S. taxpayer dollars being used to pay the Taliban government taxes, fees, duties, and et cetera, seems outside the bounds, Mr. Chairman. I know my time is or my time is up, but I do appreciate the opportunity to continue this conversation with you, Madam Secretary. I yield back.
Gentleman's time has expired. With that, we go to the gentleman from Texas. Mr. Gonzalez is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Madam Secretary, for being with us this morning. I'm pleased that the Treasury Department noticed the proposed rulemaking concerning the outbound investment screening program. There's no doubt that U.S. money should be kept out of the hands of Chinese and Russian firms. I also want to add another angle concerning foreign investment that's a concern to us in South Texas and I think along the border. Many of our constituents are seeing Chinese money flooding into Mexico where manufacturing facilities are at and are being developed south of the border so goods can be shipped to the United States as a Mexican product instead of Chinese. And I worry that if we consider only the direct U.S. investments into Chinese or Russian factories, that they can produce technology of concern, those investments may be directed instead to factories overseas and Chinese-owned companies in third nations. Will the Treasury Department consider, or have you already considered, those sort of nonlinear investments that aim to evade the goals of the President's outbound investment screening program? If not this mechanism, in what capacity could we work together in order to prevent U.S. investments from funding, for example, the semiconductor factory that's in Mexico owned by Chinese entities?
So I think you raise an important issue, and it's one that we're aware of at Treasury. I made a visit to Mexico last year, and this is a matter that I've discussed with senior Mexican officials. We're discussing with them developing their own, essentially, investment screening mechanism similar to our CFIUS. They're open to discussing and working with us on that. And I think that's a first step at looking at these issues. We realize the North American market is highly integrated in that we have a common interest in.
That's what my next question was going to be. Have they been forthcoming and wanting to work with us?
They have been, and I discussed this when I was at Mexico at a press conference that I gave there.
Very well. I think it's a huge concern, not only our direct investments, but a lot of things that are happening with Chinese moving into that region.
You're right, and it's an important issue.
Thank you. Also, in 2023, Mexico received a record $63 billion in remittances. It was a 7.6% increase from 2022, of which 95% of this came from the United States. With a recent surge in remittances, I'm concerned that this has inadvertently made it easier for some of the Mexican cartels to launder drug money, and cartels use civilians as conduits for remittances, who then hand the money back to the cartels, a practice known as smurfing. What is being done to limit the use of remittances as an avenue to finance illicit activities? How can we identify and monitor laundering schemes run through legitimate financial transactions? And I feel there's an increase. There was a recent report by a Reuters journalist that was down there that actually followed one of the ladies in Sinaloa that went to one of these places to collect the money and then kept a very small slice of it and gave the majority of it back to the cartels. It's a huge concern as remittances grow, and I think certainly they're harder to monitor and police. What are we doing, and what cooperation do we have from Mexico? I think that should be a clear area of concern. I just see it very unregulated.
So, I mean, we've certainly been focused on Mexican drug cartels and have been cracking down on them with Mexico's cooperation. With respect to remittances, many of them occur through money service businesses. And those businesses are subject to the Bank Secrecy Act, AML, CFT, compliance regime.
There's been a spike in these resources coming into Mexico, and it's just a concern being on the border and seeing all the activity and the growth of the Mexican cartels on the other side of the border is really worrisome, and I think we should pay closer attention to this. There's a Mexican think tank that just came up that said $4.4 billion of the money that we remitted to Mexico last year was sent directly to cartels, and I hope that we can continue to work on this issue. It's a huge concern for all of us.
It's an important issue, and of course we want to work on it.
Thank you so much.
Gentleman's time's expired. Just a reminder, the Secretary does have a hard stop at 1 o'clock today, so we're going to try and squeeze in as many as we can here. Right now, the next one up is Mr. Barr, who's recognized, a gentleman from Kentucky, for 5 minutes.
Thank you, Madam Secretary. I want to drill down into the Treasury Department's ineffective sanction strategy when it comes to Russia.
A June 26 Wall Street Journal article highlighted a collision of foreign and energy policies within the Biden administration and frustration among Treasury staffers over the lack of action against oil trading networks that ferry Russian and Iranian oil. While Treasury sanctions on the one hand are attempts to, quote, throw sand in the gears of Russia and Iran's oil export machines, unquote, the article identifies attempts by the National Economic Council, led by Lael Brainerd, to keep global oil output up to ward off pressures on inflation and, quote, keep gas prices stable ahead of the election by encouraging oil to flow into global markets, unquote. Secretary Yellen, who is running the show in the administration? Those who want to be tough on our adversaries like Russia and Iran, or those who want to ensure that global oil flows keep gas prices stable ahead of the election?
It's a very good question. I think the article is frankly very misleading because the NEC and Treasury are really on the same page. We've been working together closely, and we really have identical goals.
So the same page in terms of trying to defend this failed oil price cap scheme.
I'm sorry, I don't think it's a failed.
Well, let me reclaim my time. Bloomberg reported last week that Russia's government revenues from oil sales rose almost 50% compared to last year. If this is not an indictment of Treasury's licensing policy and the failure of the oil price cap scheme, I don't know what is.
Well, it worked very well in the first year.
Not anymore. Not anymore, Madam Secretary.
Okay, so
let me reclaim my time. I offered an amendment to the Financial Services Appropriations Bill. I got 30 Democrats to vote to sanction Russian oil exports. 30 Democrats, mostly climate-oriented Democrats. This administration, which has this massive climate focus, wants to punish American energy production. That's the whole strategy, through ESG and climate disclosure and no permitting, no licenses, no Keystone Pipeline. But when it comes to Putin's oil machine, license it. Allow exports of Russian energy. What on earth are you all doing?
We've said explicitly from the very outset, we've had two goals with the price cap program. Number one, deprive Russia of revenue. Number two, make sure the global oil market is well supplied.
You failed in both.
Neither Americans nor
Madam Secretary, you failed in both. Because you are waging a war against American energy, but you're green-lighting Russian energy, you're weak on Russia. I want this administration to revisit the failed oil price scheme and sanction the crap out of Vladimir Putin's energy, which is financing the war effort.
Well,
and the oil price cap is not working. Let me shift to China. Treasury has prohibited U.S. dealings with the publicly traded securities of certain companies connected to China's military-industrial complex. But since being put on CMIC list, Hikvision revenues have risen 30%. Sinochem's revenues up 60%. China Mobile stock prices shot up 90%. Huawei, SMIC, went on to develop advanced 5G chip, and Huawei isn't public to begin with. Clearly regulating the trading of publicly traded securities has proven irrelevant. Why doesn't Treasury impose blocking sanctions on these CMIC companies?
Well, I can't discuss particular cases, certainly not in this venue. We're always looking at entities that are engaging in activity that could merit sanctions.
Well, Madam Secretary, would Treasury welcome an opportunity by legislation, my bill, on China outbound? You all have issued an executive order. I think it's Congress's responsibility to create an outbound investment framework. Would Treasury welcome an opportunity through legislation to explain on an annual basis why it has refrained from imposing full blocking sanctions on Chinese entities on the CMIC list? And it could be perhaps in a SCIF.
Well, we can discuss it with you, and I'll have my staff be in touch with yours to understand.
Well, we've got a list of Chinese military-industrial complex companies, but Treasury hasn't sanctioned any of them. That's a real good question for Treasury to answer to the American people through their elected representatives in Congress. And with that, I yield.
Gentlemen, time has expired. With that, we go to the gentleman from Illinois. Mr. Foster is recognized for 5 minutes.
Thank you. Secretary, was there anything you wanted to add about the oil cap policy that you didn't have a chance during that previous round of questioning?
Thank you. Well, what I wanted to say is that an objective is to keep the oil market well supplied, so neither Americans nor residents of many countries around the globe, including the poorest, are faced with spiking energy prices. And we are considering additional sanctions on Soviet ships now that Russia's taken this approach, but we want to evaluate what the potential impact could be on global oil markets, and we're discussing that in an interagency basis.
I'd also like to congratulate the administration on having made a significant amount of money with the SPR, the Strategic Petroleum Reserve, whereby you're sort of monetizing your ability to have to store oil, to be able to sell at a high price and refill at a low price and make the taxpayer a whole pile of money. So to the extent that you were at the table there, good work. I'd also like to second my congratulations on your successful pilot program for the IRS free file system, and believe it should be an option available to taxpayers at all income levels. I've been introducing legislation in this area for more than a decade, and so it's really nice to see it come to pass. And as a next step, in February, I reintroduced the Autofill Act, which would allow individuals who choose to download tax forms that are automatically populated with information that the IRS already collects from employers, from the Social Security information, from financial institutions. You know, our tax code's complicated enough, and we shouldn't force people to keep around shoeboxes full of all these stubs they get, and they have to use them for their tax forms. And this would be a common sense solution available in most countries, to just have the government help you fill out the part of the forms with information they already have. So please consider that as a next step in strengthening this very successful pilot program. Okay, now on April 24th, President Biden signed the Repo Act, which gives the administration authority to seize Russian assets and use them for the benefit of Ukraine's war effort and their eventual reconstruction. Last month, the G7 agreed in principle to use the interest earned on frozen Russian assets to back a $50 billion loan for Ukraine. And following that meeting, you said that the logistics of such a loan were complicated and that you could not provide a timeline for getting that money to Ukraine. And since you made those comments a few weeks ago, has progress been made to get the money to Ukraine? And what challenges are you running into from our G7 allies? Is there anything that Congress can do to speed this process along?
Well, thank you for that. The leaders in the G7 asked that we be ready by the end of the year to transfer $50 million, so $1 billion. So we're working very closely now. The leaders have endorsed this general concept to work out the details. There are steps that the European Union needs to take to make sure that the windfall revenues will remain available to service these debts. We're discussing the allocation of the loan among G7 members. These are very intense discussions taking place right now.
Anything we can do to provide additional leverage in those negotiations, we're, I think, on a bipartisan basis, willing to do.
Honestly, this is a collaboration. The G7 is working together constructively. There are some complex issues here, but we're working constructively to get this done.
That the $50 billion loan could be the first of several, that this is the first tranche, and if necessary, there could be more behind it. So how far can this strategy go, and on what timescale to support Ukraine? You know, does this, what fraction of the amount of money you'd get by simply seizing and liquidating the Russian assets?
Well, we think all options should remain on the table, and the Repo Act.
But if you have to stick to this business with the loans and using the interest income, what are the limits to that?
We believe that a global approach, a strategy where the G7, the European Union act jointly together is effective and appropriate. So we're looking for strategies that other countries can also endorse. And the issue of simply seizing assets, whereas we have been very clear we believe there's a sound legal basis to do so in the United States and elsewhere. This has been something of a bone of contention. And so the approach that the G7 leaders have endorsed is an alternative which doesn't raise all of the same issues as seizing the assets would, and it lets us act together as a coalition.
Oh, thank you, and keep at it.
Gentleman's time has expired. With that, we go to the gentleman from Texas. Chairman of the Small Business Committee, Mr. Williams, recognized for 5 minutes.
Thank you, Mr. Chair, and Secretary, good to see you again. The last time you were here, I asked you that what actions Treasury was taking to educate small businesses on their obligations to file beneficial ownership information in FinCEN. And you acknowledged the burdens that small business will face with compliance surrounding this rule and committed to working with businesses to better educate them on compliance. However, from what I've been hearing from small businesses owners as I travel around and on being on the ground, is that they are still unaware of the FinCEN's beneficial ownership reporting requirements. Now, FinCEN Director Gackey recently said that only 2 million small businesses out of over 32 million have filed beneficial ownership information. So this shows that something needs to be done, because you cannot hold these small businesses responsible for something they've never heard of or even aware of the rules of the road. So my question would be, could you expand on how Treasury will work with small business to educate them on beneficial ownership? And is there any possibility for Treasury to provide more time for small businesses to come in compliance? That's important.
So at this point, we're engaged. FinCEN is in a very broad outreach effort. It's received 2.7 million filings already. The filing and requirements are easy to do. And FinCEN believes that the time frame is adequate. The companies in existence before this year have until January 1 to file. But that's their current view if things don't go according to plan.
Yeah, well, small business is burdened right now, so please take a look at that. And the Biden administration's climate agenda is forcing the IMF and the World Bank to take their eye off the ball and channel resources and funding toward climate-related projects and not projects that would enhance the overall well-being of a country or region. The World Bank is working to devote 45% of their financing to climate, and you are voting in opposition to any fossil fuel projects. Developing countries need to access to electricity and other vital resources, not some unelected bureaucrats telling them that they can't finance an energy project in their country because it would support fossil fuels. So my question would be, because of this, many developing countries will be forced to turn to Chinese financing. Now, how is Treasury going to combat growing Chinese influence around the globe if your policies are enabling them to grow their influence?
Well, look, what we see is that countries in Africa and elsewhere, especially those that, as in Africa, you have 600 million people who don't have electricity at all, actually want to use renewables to expand access and to address climate, and to have systems that over time will be more secure, less dependent on fluctuations in global markets. And this is the strategy that they prefer. Our policy in terms of lending is that if it's not possible to use renewable energy, we want that to be looked at first. If it isn't feasible or it's unduly expensive, we will vote in favor of projects that use natural gas. And in fact, in those that have been presented, the great majority we've been supportive of. But climate is a very serious concern in so many countries around the world. It's impeding the goals of sustainable development and poverty reduction. And so it is a priority of borrowing countries as well as the World Bank and other MDBs.
Yeah. In business, you don't want to sell off an empty shelf, and you want to have products that people want to buy. So I think we need to have all options available. There's also been developments at the IMF under the Biden administration that I find extremely concerning. Specifically, the IMF proposed that billions of dollars in special drawing rights assets be generally allocated to its global membership. Now, this is alarming as hostile actors like China, Iran, and Russia can receive the funding to use it as they please, all of which can be done without congressional approval. So quickly, Secretary, could you, you should be using your influence in the IMF to protect U.S. influence, ensure transparency, and prevent malign actors from exploiting resources. So how could increasing IMF resources and allocating SDRs to China, Russia, and Iran affect the U.S. national security? And what steps are you at Treasury taking to protect our U.S. interests?
Well, we oppose allowing malign countries to use SDRs that they receive as allocation. We will not exchange them for dollars, which must be done in order for them to be used. And we work with other countries that are have that capacity to make sure it doesn't occur, and it hasn't occurred.
Gentleman's time's expired. With that, we go to the gentleman from New York. Mr. Meeks is recognized for 5 minutes.
Thank you. Secretary Yellen, let me just say I greatly appreciate the work that you have done with the State Department, with the National Security Council, and with the whole Biden administration in isolating Russia in the wake of its illegal, unjustified, and immoral invasion of Ukraine. You know, just yesterday, the Russians bombed a children's hospital in the center of Kyiv with absolutely zero evidence of any military targets were within the vicinity of such site. And then I've overheard and heard some members of Congress rudely addressing you, talking about Russia, when in my opinion, what they should be talking about is the candidate of their choice who has a bromance with Vladimir Putin, who gave away top secrets to Russia in the White House, who said that the Russian intelligence is better than the U.S. intelligence, who has said that he wants to be an island and wants to immunize what Russia does with its parades and everything else, that he likes a strong man. So they shouldn't be talking to you or worried about you and your policy. They better be talking to their candidate of choice, as the rest of the world is worried about him being in the presidency.
Mr. Meeks, we just had this conversation a while ago.
Well, if you'll do it, I've got to come back.
We had this conversation a while ago, and the conversation is that you stay away from the personalities and individual activities of the candidates, whether it be Mr. Trump or the President Biden. So therefore, direct your comments to the Secretary with the issues of the day. Now you're going into the personalities, sir. That's not going to.
I'm talking.
We've already gone down this road. We've already gone down this road today. It's going to stop. Go back to questions with regards to other issues that you think are important.
Mr. Chairman.
Yes.
The gentleman from New York was speaking about facts. He was
getting into personalities.
He was not making up anything.
The former president by name.
He was talking about facts.
I've ruled how this is going to go. Okay, Mr. Meeks, you're recognized for the balance of your time to address issues that are important to this committee with regards to the Secretary's responsibilities for today.
I love talking about facts here, Madam Secretary, and the record will reflect that. Now, I have two bills, Madam Secretary, and I think this is the way that we should look at that I would believe would further strengthen the sanctions on Russia, both of which have been sent to your team and have garnered broad bipartisan support, because I try to work in a bipartisan way, except when I hear the other side not doing that, then we've got to make sure that we step up. One bill would sanction leaders of the Russian nuclear company Rosatom, and the other bill would preemptively ensure that no PRC or other foreign company could work to build a tunnel from the Russian mainland to Crimea. And I'm hopeful that we can do some work together to get those bills into law, and I hope we can do it this year. But I know that you've been doing a lot of work in this area, so could you just please discuss the work you and the administration have done to hold Russia accountable, as well as its enabler, China?
Well, we have been focused since Russia's, and even before Russia's brutal invasion of Ukraine, when we realized that it was likely to happen, on creating the toughest possible sanctions regime that we could to deny Russia the military equipment it would need to carry out this war. And as time has passed, we've strengthened our sanctions. We've sanctioned individuals, entities, banking organizations, virtually the entire military-industrial complex of Russia, and then have been seeking to reduce Russia's access to these goods that it gets from China and other countries that are suppliers. Iran is a supplier of drones, UAVs, and we have an extensive sanctions regime which we're constantly tightening. Most recently, with respect to China, not only have we cracked down and placed sanctions on Chinese entities and firms that are involved in supplying military-related goods, we've now gone after, with the president's new executive order, financial institutions that are processing payments involved in this trade, trying to, basically threatening to cut off banks' access to the dollar-based trading system if they facilitate these transactions. And we've recently broadened it so that any foreign bank, Chinese or in other countries, that engage in transactions with any sanctioned entity in Russia, and that includes all of the largest Russian banks, Sberbank, VTB, and others. All of those financial institutions are subject to our sanctions, and we've put a price cap on Russian oil to try to reduce their revenues, so reduce
You've been
their
doing
access,
a lot of
reduce their
work, and you're
revenues.
continuing to do so. I wanted to ask you a question about outbound investments, et cetera, but don't have the time. Thank you for the facts. Thank you for the work that you're doing to hold Russia accountable.
Thank you.
And China.
Gentleman's time has expired. With that, we'll call a stop to the hearing here with regards to the Secretary's wish to be able to stop at 1 o'clock. We're going to get you out, Madam Secretary, I believe, by the time. I'd like to thank you for being here today and your testimony. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair. I'll forward the questions to the witness for a response. Ask you, Secretary Yellen, to please respond to those no later than August 30th, 2024. With that, the hearing is adjourned.